Watch us trade live right before your eyes from 5 a.m. to 7 a.m. every market day Pacific time. Join us now only on SwissFT.com.
Good day, traders. This is Richard. Use my right-hand trade to take a few trades a day to keep the job at bay. NinjaTrader presentation, May 2nd, 24. Okay, let's get started. My right-hand trade is simply finding the highest high in the neighborhood, a fractal high setup signal to sell. My left-hand trade, which is the opposite, is a buy signal at the bottom of the chart, and you've got a left-hand trade sticking down as the lowest low in the neighborhood, and you can take that trade long once the wick gets to be about the size of the body, a little bit bigger, and you've got yourself a buy signal. Now, there's a configuration to it I'll get in a couple of minutes. Volume. I use volume to help me analyze the likelihood of my left-hand trade or my right-hand trade taking off and working as it appears it may. Nothing is for certain in anything to do with trading. However, we have managed to track down the few elements of the trading regimen into a quasi-science, enabling us to maybe reading the mind of the market 75 to 85% of the time. We get it right, 75% at least, most frequently 85% of the time. But there's always that 15 to 20% that don't work. So you have a really nice stop, a stop that will not damage your trading capital. So next, the following chart shows 7 trade setups, 3 buy signals, 4 sell signals, and 1 very big buy signal. Let's take a look at that. So I said there were X number of buys and X numbers of sells. Now this is a chart. Most of my charts for intraday trading are 15-minute. I use 4-hour charts on the weekend to forecast next week's trade setups. But this is a 15-minute chart. I've got a buy over in the left-hand side. You see that little blue circle? And that is a buy signal. That's my left-hand trade. Now, this is the first trade of the day is a buy. And we went all the way up there. Then we got a sell. Notice that topping tail up there? You can't very well see it, but I've circled it in a blue circle over a gray background above a white candle. And that's a pretty long wick. That signified a sell signal. And then imagine that white thing being my middle finger. My middle finger is the highest high of my right hand. When I hold it up to my face like this, I'm looking at my palm. You're looking at the back of my hand. I'll show you my palm. Now you've got the middle finger there, and you got my ring finger, my index finger and my thumb, then my ring finger over there, and my little finger right there. That is the full setup. You don't see, I never do see these over here, but this is the best setup right here. You see that, those two right there, and then you're looking for another high because that particular high right there probably has a topping tail, but it may not be as big as you want it yet because it might not be finished climbing. So you wait a little bit longer and see if the next candle goes any higher. And if it does, that's probably going to be your right-hand trade. It takes about 5 full candles to make my right-hand trade. But the first 3 are critically important, and the middle finger is the highest high. And that's this thing right here. And once I see that wick up there, and there's no other higher highs nearby, this is way down there, and there's none over there, I know that the probability of this being the highest high, highest one in the neighborhood, is going to be right. And so I sell it right about midpoint of the wick. not the body, but the wick. I put that sell order in and get short. And then I watch and I put my stop one tick above that wick high. That's only going to be somewhere in the neighborhood of 10 ticks on a crude oil contract. This is not crude oil. It's got too many numbers over there. This looks like gold. So same thing in gold. You got the high is high, and you sell it in that wick. You don't wait for it to be in the body. You don't try to get the top of the wick. You try to get the middle of the wick, because what happens is it goes all the way up to the high, makes the high. You need to know that that's a confirmed high. And so what will happen is it'll pull back down, because at one point this whole body was up there and that was your high. The body was high. It was probably a Maribuzo or a flat top for a moment, for an instant, for a second. Then it started making a wick. And you don't do anything until it gets to be a significant portion of the entire body. That wick needs to be long enough to know that it's a topping tail and not just a resting point for the next candle to be a higher high. You don't want a higher high on the next candle. You want a lower high, and you get one. And that PP right under the word sell is my primary pivot there. One of the floor trader pivots that I use is a guide to simulate my Fibonacci numbers, which are extremely important. But what I'm trying to do is explain my right-hand trade. So let's stay with that until I finish. That's a right-hand trade. That's the second right-hand trade. There's the third right-hand trade. There's another right-hand trade. And there's a buy signal. And up here is another right-hand trade. And I call it a fail, a sell fail. In other words, you got a double top. See that top right there and that top over there? A double top is golden. Maribuzos and gaps and double tops are our golden nuggets. A fractal high is a signal to sell. We only trade a couple hours. Because why? Because the volume is good between 5 and 7. We got European traders trading simultaneously with American traders. So I use a net change tool to keep track of volume, and we'll talk about that more later. I find the best 15-minute chart spread, gain ticks versus lost ticks, is 10 versus 30. So I risk 10 ticks, and my target is 30 ticks. I do that with most instruments. A 3-to-1 win-to-loss ratio is ample, appropriate. My favorite audience is a group of traders who have worked at trading for a few months but are not yet to the taste of the sweet spot of success. I'm here to help. I only do 2 things that I enjoy. I teach and I trade. I'm a good trader and I'm a reasonably good teacher. I want things to come to you in a way that you will remember them, act on them, and benefit from them so that you can make a living at this game. It is not really a game. It is a profession. It is a business. My right-hand trade. This is a shot of the Golden Gate Bridge, and I just happened to be standing in front of it one day in my t-shirt. And somebody took my picture with my right hand up. And that's what it looks like. That's what my right-hand trade looks like. That's why we call it that. It stems from the appearance of a fractal high on a 15-minute candle. This is the highest candle among the neighboring candles in an uptrend. When the topping tail gets higher than the body of the candle, this may be a setup signal to sell short, but test it to improve confidence. Now this is, I wish I could make that bigger, but you can see that I got my thumb, got my index finger, I got my middle finger is the highest high, got my ring finger, I got my little finger, and they're all right here. There's the thumb, there's the index finger, there's the middle finger, there's the ring finger, and there's the little finger. You see how they're kind of arrayed right there, just like my right hand? That's what we look for. And this is an A, B, C, D. We're expecting price to go down there. It went down there and got there over there. We expected that. We knew that was going to happen. Next, we read the mind of the market. It's that simple. What is consistent success? In my opinion, consistent success is a net gain in your live account for an entire year. just take a little bit of money from the market out of each trade setup, each right-hand trade you get. And once in a while, take one of the left-hand trades also, because as you saw in that illustration, the left-hand trades are more profitable, but they're not as good and they take a long time. Consistent success. Are you there yet? If yes, why are you here? So this is another picture of I said a minute ago, I wish it was bigger. Well, here it's bigger. This is the same picture you saw with my picture on the page. Now I'm a bear, and Thomas D. Mendelsohn took this picture. He stood by the stream watching for bears to fish for salmon for days before he got this shot. And he's one of the most renowned wildlife photographers in the world. And I just love this shot because that's me getting ready to close my right-hand trade and feel like I ate today and I don't have to eat again till tomorrow. That one fish will feed that bear for the day. Now here's the famous bull, the Wall Street bronze bull, probably one of the most photographed things in New York City. And you know there's a lot of tourists that go to New York and take a lot of pictures. This baby is big. It's bigger than a life-size bull. It'll frighten you just to walk up to it. But it is the bull, and it symbolizes buying the market. The bear symbolizes selling the market. Why? Bears are cagey. They live in a cave. You never see them unless they're hungry. And when you see them, you know they're hungry. You better get out of their way as quietly and as unobtrusively as possible. But that bull has a completely different behavior. It's aggressive and it is a charger. And that's what those buyers do. But they all get tired because they work so hard that when it gets up there, the bears sneak in. They smell a sell and jump in and take that thing down about 40%. It's actually 38.2% retrace to the downside. That's your slide. That's the distance between B and C. See, A is the bottom, B is the top, and then you sell it up there at B and write it down to C. You're only getting 38% of the move because the initial move up was probably 61.8 or 78.6. So you're just getting the retrace on these right-hand trades, typically, because you're taking a short from the B down to the C. And then if you want to buy it at the C, you can turn around and reverse it and write it up to the C, from B to C, and then sell it again and write it down to D. And then at D, you buy it again. Now here is another illustration of a bunch of sells. There's not very many buys here. I just put the sells on here to give you an idea of how many sells there might be in a day. So let's look at the numbers over here. Now this one does look like, oh, you see it's up there around those numbers look like 84 and 85. The top one up there is 85. That's what oil was when I made this chart. And it got all the way down here to 82. So here was a trade setup. There's a fractal high. There's another fractal high, another sell. There's 3 sells in there. See, there's 1 there, 2 there, and 3 there. See, this is 1, 2, 3. This is actually the confirmation of the middle candle there. This was the first. This was a fractal high, so this was the confirmation because that's next door lower, higher low. Excuse me, lower high. This was the signal high to sell. This one confirmed it wanted to go down. It's black candle and it did go down all the way down to there and it came back. This is an A, B, C, D. So then we've got another one. See, this is a full A down to B, up to C. So we sell the C. We get down here and we could have bought here, but we sold again here. We waited. We sold again here. We waited for all this to happen and sold again here. We waited for all this to happen and sold again here. We waited for all this to happen and sold again here. And we made money on every one of those trades. And then we ran out of volume. See how volume just dropped like a rock? What time is that? 11 o'clock. Well, it drops like a rock over here at 7 o'clock too on most days, but this was a big day. So it went powerful all the way to the close at 1300. That's the New York Stock Exchange close in the Pacific time zone, 1 o'clock in the afternoon. All right, so there's another sell, all this in one day. How many? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. 12 trades in a day, all successful. So I call this Trading 401 because it's a graduate course. It's a senior course or a beginning graduate course. In graduate school is usually 2 or 3 years. This is graduate work. You've got to put in your dues. And I believe, and I ran an organization called Day Traders USA in Costa Mesa, California at the Orange Coast College, where we had a meeting every other Saturday for about 7 years, from 2000. Actually, it started in 95, and I bought it in February of 2000 and ran it until 2007. And we had a big crash next year in 2008, and the tennis kind of drizzled. But it was fantastic between 2000 and 2007. People wanted to learn to trade, and I had 5,000 people show up at that meeting. Some of them showed up at every meeting for 2 years, which was 24 per year for 7 years. Some of them showed up once a month, once every 2 or 3 months, and some of them showed up every meeting. But there were over 5,000 people, and I'll bet there's only 20 people still trading, because we didn't know anything. We didn't know how to guard our back. We didn't know how to guard our six, as the teams, as the SEAL teams would say. We didn't know. And nobody really taught us well. We had so many teachers that we'd switch from one to the other. We should have landed on one teacher. And if we had landed on the one teacher I'm thinking about, because I reconnected with him a few years ago, Larry Pesavento is my mentor, and I met him in 2001. He came back to Day Traders USA and spoke to us in 2002 and 2003. And he was the smartest man that ever walked into our place, and we had 50 different speakers. Larry's the man. He still presents today. I have a few little sayings here. I believe my right-hand trade can help traders jumpstart their success. I like to help people succeed. So I teach these ABCDs that Larry taught me, and they work. And I believe in getting rid of your FUDs, your fear, your uncertainty, and your doubt about this, that, and the other thing that hang you up. Excellence is essential in trading. If you're not excellent, get out of the business. You can't handle it. Loss will exceed gain, and you've got to develop your regimen to avoid losing. And I'm here to tell you, you're not going to like it. I believe, regardless of your IQ, some people have an IQ of 90, other people have an IQ of 120, or sometimes there's a genius around with a 30 or 140. Not very many, but I don't care what your IQ is. If you don't practice this stuff for at least a year on the simulator, you're going to lose money. Don't even bring money to your NinjaTrader account. I know my broker, Sean Riley, would scream at me for saying that out loud because he gets paid on your trades. But wait, he would much rather have you toy around with the simulator for 1 year, which it takes. Try to do it any sooner than that with real money, you'll lose it. You need to practice for 2 hours a day, 7 days a week for a year. And then if you can't get it, say, I need more help before you try to do it live. But spend a year and maybe spend 6 months on the simulator. And then in the third quarter, try trading the micros. Open a $700 account, put in $700. The minimum, I think, is $400 for a micro, and trade that and try to make money. Try to double that account to $1,400. If you don't double it to $1,400 and it twiddles down to $250, add back about $750 and take it to $1,000 and try it one more time and try to double that $1,000 account to $2,000. And when you do that, you're successful. That's my opinion. I'm sticking to it. If you can double a $1,000 account on the micros, you will be successful. We have a simulator at NinjaTrader, and the simulator is what drew me to NinjaTrader from another trading software that I'd picked up at Comdex 2 or 3 years before. They closed it down at the closing time and didn't open it back up till midnight, and that was annoying to me. And so when NinjaTrader came along and I found out that they only closed it for an hour a day, I found out it had a simulator, strategy renter dinner. That's what caused me to fall in love with NinjaTrader in 2004. Been with them ever since. Love them. I'm pleased to be here speaking on their behalf. Volume. Now, some people don't use volume. My mentor, Larry, doesn't look at volume. I don't understand how he can do it, but I know he reads ABCDs and he reads the fibs. He doesn't need volume. I'm still using the old crutch of volume. I want to know what the relative strength of volume says, because when it gets overbought up or above 80, it's going to come down. And when it gets down below 20, it's going to go up. It can't help itself. So I look at the relative strength and I watch the divergence. And I'm not going to teach those now, but they're important to know about. So this is that bear that an artist friend of mine fixed. So I had a loser bear. Now here are those Fibonacci levels that I've rattled off. We start at 0 and go up to 38.2. Now there's one in the middle there that's 21.4, which is halfway between 0 and 38.2. And then 38.2 is a third, 50% is half, 61 is 2/3 roughly, and 78.6 is 3/4. And then we jump to 100. Then we go to the extensions of 1.272 and 1.618. Now those Fibonacci ratios, after he died, they named him Fibonacci. I think it means something great in Italian. But anyway, he was a great man. And he brought a very significant set of tools to the world, to the Western world, to Europe. Namely, it was called Arabic numbers. He got on a 737 in Rome and flew off to Cairo and then trooped up to those big old things there, what they call those things, pyramids, and talked to all those engineers that had Egyptian engineers that had studied those pyramids for probably 200 years and figured out that the arithmetic that put those pyramids together had, or mathematics, I don't think arithmetic's the right term. The mathematics that put those pyramids together had something to do with these here Fibonacci ratios, which he invented. And then he invented the Fibonacci sequence. And he found out that 0 is a Fibonacci number, and 3, I think 1 is a Fibonacci number, 3 is a Fibonacci number, but 2 is not. Then 5 is a Fibonacci number, 8 is a Fibonacci number, but 6 is not. And then 9 is not, 10 is not, 11 is not, 12 is not. The next one's 13. 5 and 8 is 13. 8 and 13 is 21. Next fib number. 21 and 13 is 55, and 55 and is 89. And the next one's about 133, I think, 89 and 55. I'm really terrible at arithmetic, and I hate doing it without my calculator. So you get the gist. This is all you need. Fibs and ABC patterns, ABCD patterns. Here's the other acronym I love. I created this one myself. FUDs I stole from Larry Chitwell, who taught me counselor selling in 1983, right after I got out of the Air Force. And I loved it. FUDs. I just love the sound of it. FUDs. It's like Elmer Fudd. Fears, uncertainty, doubt. Get rid of those things in your persona. Eliminate that stuff. How do you do that? You get confident about what you want to do and how you want to do it. Get confident. Once you're confident, you develop these feds. I don't mean the FBI either. I mean focus, energy, drive, and stamina. You must focus on trading until you get it. For 2 hours a day, try to trade on the simulator. And I only trade about 4. I won't be in more than 3 at a time. But during those 2 hours, I can be in an oil, a gold, and a euro. And maybe a gold and a silver, and not a euro, but only 3. One of those has to either go to target or go to stop. And my stops are $100. And my targets are $300. That's all I care about. I want $100. I mean, I risk $100 to make 300. 3 to 1 risk reward. That's it. Now, I focus until I get it. I work on it until I get it. That requires energy, desire, determination, or drive, all 3 D words. And then, of course, you've got to have the stamina. So you have to be in mental and physical shape to have the energy, focus, and drive. In summary, the bull is a pushy go-getter. Join us in Zoom Room Radio, which is in Facebook. You can get us by Facebook. You can write us at zoomroomradio@gmail.com, or you can just find Zoom Room Radio in Facebook and join our room. That's the link right there. You write me at zoomroomradio@gmail.com. I will send you this link that will admit you to our room for 1 entire month because you're trading at NinjaTrader. Last year I offered a week, and I got a few people that came along, and a couple of people stayed. I'm looking for more students. I love to teach. I'm 84 years old, and if I live to 90, I hope I can see you successful. It takes about a year to get there, to have that feds, and then you should make money in your second year, and you should make money every year thereafter if you manage your risk. Watch your 6. Thank you all very much for your attention.
Join us now only on SwissFT.com.